Bitcoin here. And what we could see on Bitcoin is this was the key level, right? And very obviously key because as we see, price was established, right? This was your high pivot before this long base of consolidation. And then on the other side, we see how once it broke above, it became support, right? And support. And then look, when it broke, it now became resistance, right? And so that was the first thing that kind of got me cued in.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Gareth Soloway breaks down inflation shocks, trades in stocks, crypto, gold, and more. Stay tuned to learn strategies and opportunities now.
That this was a major level. And again, you can see over and over again, rejection off of resistance, rejection, resistance, rejection, resistance. And finally, we've closed back above. And you could almost look at this like a hilltop. On one side of the hill, price goes this way. On the other side, it goes to the downside, right? So which way does the water run essentially down the hill? One side or the other, to the upside or the downside. Now, one of the things that gave me a heads up, and I was talking about this in my daily game plans, and by the way, I'll be doing my daily game plan at 9 a.m. Eastern time this morning on the Verified Investing YouTube, as I always do. And it's a full-fledged 20-plus minute show live where I really go in depth on all charts, inclusive of crypto, stocks, and commodities. But one of the things I was noting the last few days is how this chart was actually starting to show us a bullish sign. Why was it a bullish sign? Well, let's dive into a shorter time frame on this chart. Okay, so we're going to get rid of these arrows and just kind of clean house. And what I want to do is I'm going to go to the hourly chart. Okay, and when we flip over to the hourly chart, what we can start to see is a pattern was forming. And again, basically what we were on the daily chart, so we're now zooming in on the hourly chart. And what this was showing us, folks, is that you had what's called an inverse head and shoulder pattern. Shoulder, head, shoulder. And this is a bullish pattern of basically consolidation or a setup that is, again, signaling further upside. And what we could see is this would be called your neckline. And the neckline of the head and shoulders is basically from armpit to armpit right here. And here's, again, your left shoulder, your head, and your right shoulder. And the key is once it breaks out, you can actually do a measurement to where this target would be, right? So we take our measurement tool and we take the lowest point of the head to the high on the neckline, right to the neckline. And when we break out, that gives us a general target. If this plays out to target, it would be about 119 to 120,000 as our upside target. Interestingly enough, there's this pivot right over here that aligns almost perfectly with it. Now, it's not the absolute all-time high, which was a spike up, spike down, but still that gives us a general synopsis, all right, or level. So again, overall, as long, and this is very important, guys, and again, I stress these important factors because, again, you have to know when you're trading, you have to know where something fails or where it's valid. And I always like to talk about the good, right, which is the breakout above the neckline of the head and shoulders, the inverse head and shoulders here. But we also have to say, okay, well, where does it fail? Because that gives you your stop out, all right? When we look at this, we go back to the chart. Any daily close back below the neckline of 113,000 approximately, right? So approximately, in fact, it's a little bit like that. It's more like that. So it's right around 113,300. That would be where the head and shoulders would be negated. So again, this is a bullish chart for further upside to as high as about 117,000 to 120,000. All right. But any close back below 113,300, let's say daily close, mind you, then the pattern would fail. Now, pattern failing on this doesn't necessarily mean price goes back to the lows. It just means you can't calculate the target anymore. It's not a valid pattern, which allows for the calculation.
Bitcoin blasted to a record at $123,181.77 as equities wobbled on tariff threats, sharpening its safe haven narrative. Flows into spot ETFs, a softer dollar, and rate cut hopes pulled more institutions off the sidelines, shifting Bitcoin from speculation toward portfolio core. Technically, the breakout above $120,000 opens a path toward 161.8% extension at $143,519, with $150,000 a psychological magnet if momentum and volume broaden. What could derail it? Watch headlines and support. A dip beneath last week's lows would refocus traders on $116,902, then the May peak near $111,966, and the $110,618 area. The short-term bull case stays intact while $107,500 to $107,335 holds. Policy tailwinds matter too. The strategic Bitcoin reserve and clearer U.S. rules lowered perceived risk, yet volatility still remains the price of admission. After a 65% rebound off April's low, pullbacks can be swift. Still, buyers keep stepping in on weakness. For now, trend, macro, and structure favor higher, with $143,519 and $150,000 the next waypoints unless shocks flip sentiment.
ETH is still in warning zone. It's kind of a yellow light here. Now, again, you might say, well, why is it yellow? Why isn't it green? Why isn't it red? And the answer is very simple. Trend line here, we broke below, but we never confirmed the breakdown. And I've been saying this for days and days and days, is that unless you get basically a close below, 42.40, then there's no confirmation that it's a real breakdown. And so far, that's been the dead-on call because, look, it's been creeping up. Now, it's still below the yellow line, the white line here. But again, if it recaptures, it likely goes back to its high here and back to 5,000. As long as it stays below, it could confirm, but it has not. And so this would be a gray area, or as I like to call it, kind of a yellow light, which is just a warning light, right? It's like pay attention, right? It's not a stoplight like red, and it's not a green light like go, but it's a yellow kind of cautionary signal here. And so we have to watch on this. Can it recapture 4,500 on a daily closing basis? If it does, I think it goes to 5,000. If it doesn't, we just want to monitor to see if we ever get a close below 42.40, and then it would break lower. And then you'd expect a move down. Next target, by the way, would be about 3,900 and change, I would say. 38.75, somewhere right in this range, would be your downside target on ETH, all right? Now, quickly just looking at Solana here. Let's take a look at Solana real quick. Solana is breaching this little resistance line. We see a close yesterday above it. I'm actually looking for a potential bigger move on Solana here to the upside. First resistance I have would be a little bit of a pivot point right in here. It would be around 244 to 245. I do think it could get there within a few days based on some momentum in crypto.
Hyperliquid's how starts with focus. It's a lean, self-funded team building a custom Layer 1 exchange that feels as fast as a CEX while keeping custody on chain. The chain is split. Hypercore runs the order book, margin, and liquidations fully on chain. HyperEVM adds smart contracts around that core. One consensus, HyperBFT, orders everything, delivering sub-second trades and huge throughput perfect for perpetuals. Momentum then came from design choices that align incentives. The HLP Vault opens market making to anyone, sharing P&L and a slice of fees so books stay deep without special deals. Most protocol fees flow to an assistance fund that buys back hype, creating a reflexive loop. More volume, more buybacks, stronger community alignment. Distribution and integrations did the rest. A large Hype airdrop seeded users, and Phantom Wallet's in-app perpetuals brought fresh flow. In July 2025, that translated into roughly $330 billion in monthly volume, briefly topping Robinhood. Culture mattered too. With just 11 people, decisions stay tight and fixes ship fast. After a 37-minute API outage, the team reimbursed nearly $2 million the next day. Speed, alignment, and simplicity compounded relentlessly. If you have been watching so far, thank you so much for watching. And do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.